Beautiful office, and we got a good crowd of our agents. So we're going to start talking about market updates, just go over some stats that I usually do. I like to go over the trends and share with you some interesting statistics. It's always hard. I always like to make this full disclosure. It's hard to make the numbers and the statistics and the graphs make exciting, but I'm going to try my best. Recession fears are still out there, so I'm going to start with that, try to get the bad stuff out of the way first, and then we get to the good stuff and exciting. There's still a lot of conversation about recession. Obviously, headlines. You're going to hear about what may happen at the last quarter of this year and what we may expect in 2024. The reason that there's more talk about it is because the numbers that we are looking at, and these numbers are strong numbers. This is the number of jobs added to the economy. If you see in July, we added slightly more jobs into the economy than what we did in June. Now, it's definitely cooling off a little bit. When you look at January, what happened in May, these numbers are coming down, but we still have a strong job market. And why all these numbers that we're going to look at is making people worried, because everybody's looking at what the Fed is going to do. And there's another meeting coming up in September. And they're going to be paying attention to these numbers. They're going to look at the job numbers. They're going to look at the inflation numbers. And they're going to make a decision based on all the data that they receive in the next 2 to 3 weeks. Here's the inflation number. So we're looking at the inflation. I've got this chart from the Bureau of Labor Statistics. Well, this is actually showing the energy and all the items. So we had the inflation down to 3% and slightly jumped to 3.2. So it's not a huge jump. Keep in mind that we were experiencing over 10% inflation about a year ago. So Fed has done a great job, but their job is not over. This is not 2%. That's what the hope is, that they're going to get it down to 2%. If you take out food and energy, because we had the biggest drop and decline in that sector, the inflation is still hovering about 4%, 4.7%. But the consumer confidence is up. I like to ask you guys, in the room, do you feel like we're in a recession? Because it doesn't feel like it, right? And with what we're seeing in the consumer market, the confidence is higher than it's ever been in the past 2 years. There's a lot of talk about the economy. I figured I want to share this with you. I was just looking at the news. The Barbie movie broke to $1.3 billion, right? And half of this money is actually in the US. Here's another one. If we were actually in recession, I don't know. I don't think if people would spend $1,300 to go and see a concert, right? So here's one more thing to share. I was in England visiting family last month and left the hotel, got on the tube. As soon as I got out of the station, this is what I faced with. I'm looking at what is going on here. Did I got here in the wrong time? And I promise you, half of the people were there they were Americans. It's a good thing. It's a sign that our economy is still strong and the consumer confidence is up. Look at these numbers. 40 million Americans flew out of the US through July. This is just this year, and the year is not over. So yeah, if you see on Facebook, on your social media, everybody's traveling, it is happening. So consumers are spending money. The airfare is now relatively cheaper than what it was last year. But these numbers are strong for the economy, and that's what's making some CEOs and people worried and nervous that the Fed might not stop, and they may push the rates a little bit higher. There is a meeting coming up in September 19th and 20th. They're going to talk about all these numbers and metrics. I've shared my thoughts with you guys in the past 6 months about what I think is going to happen. I'm not a future reader. I'm not going to make any bets here, but I think based on these numbers, I don't think the Fed is done. I think we're going to have at least another 25 basis point between now and the end of the year, and hopefully that will be the last rate increase. They've already increased the rates by 525 basis point in a short amount of time, but I think there's one more left. So if they pause in September, there will be one more hike between now and the end of the year, based on all the numbers, based on the consumer confidence and what we are seeing. This chart is going to show you what happened. So it started in March of 2020. Look, we had a pretty much stable zero base for the rates for a long time. And then we have to start bringing the rates back up in May. And you see in a short amount of time, it went up by 500 basis points. CEOs are predicting a mild recession in the US. This is what you're going to be seeing more and more probably on the headlines on the news. CEOs are worried about what the interest rates do and making the investment more expensive for companies. It can lead into layoffs. So I want to explain, not that I agree with Jamie Dimon or Elon Musk. You know, they're smart people, but their analogy, we know that sometimes they call the market, they were off. Elon came out and say there's going to be huge recession in the housing market, right? And obviously that's not happening. But if you look at why they're worried and nervous about what's happening in the market, they're studying what the Fed has done. This is not a really exciting chart, but the gray bars that you're looking at, these are recessions. And if you can see, every time we had a rate hike, it was followed by a recession period. Every time the rates went up, it was followed by a period of time that the economy was slow and sluggish. These areas that are marked green, this is where Fed was successful in increasing the rates but not causing a recession. Okay, now I'm going to show you the instances where they were not successful and they kind of pushed too far. Right? This is what CEOs are nervous about, that they're saying they're almost going to go too far with the increases, that we're going to experience that. But that's one thought. Chairman Powell is hoping for a different outcome here, obviously. You know, he is still hoping for a soft landing. And so here's the good news. Here's the good news. About 70% of all the economists surveyed by the National Association of Business Economists, they agree with Chairman Powell. So a good number of economists that are looking at the market, not CEOs and business owners, but they believe that, yeah, there is a good chance that we're going to have a soft landing. And it won't be a bad recession that some people are expecting it. And there's a third school of thought here that I tend to agree with that more than the other two. I think what we're experiencing today is a rolling recession. It's a mild rolling recession. But what is that? That means that different sectors of the economy are going through the cycle at different times. So when you think about what happened, a lot of you remember what happened in 2008. That recession, it was all sectors of the economy, all at the same time. We had the banking, we had the housing, you know, the manufacturing, everything came to halt. But now this time you see that this is going through different cycles at different times for different industries. The travel industry kind of tanked, obviously, when COVID started. It peaked and you see it had a few spikes and now it's up. Look at the manufacturing. You know, obviously, again, COVID and restrictions caused that business to kind of complete stop. And we had a hike by mid-2021, and now manufacturing is down because the rates are up, because the cost of borrowing money is higher. So different sectors, if you look at it, they have different peaks, and that's what a rolling recession is, that at the end of the day, some of us in the industry that were involved, like the housing, we're feeling it, and some others don't. The service industry is not feeling a recession, but the housing industry is totally different. So let's bring it out to our business. This is a slide from NAR. Dr. Yoon came out with this about 2 weeks ago, and he and a lot of other people in the business, they believe that housing market is bottoming this year. So this is going to be the year that we do the least number of transactions. Look at 2023. And then what happens when an industry bottoms out? There's only one way to go, right? It's going to go up. I put this in here not to go and give you guys a flashback of 2008, but I want you to understand why you hear a lot of people compare this market to 2008. Here's what happened. We went from 8 million transactions, resale and new construction. We had a 51% decline. We went down to 4 million homes. That's what happened in that market. Now we're almost going to do the same number of transactions, but the decline is 30% because we're coming down off of 7 million versus 8 million. But the reason a lot of people compare this is because we're going to be doing the same number of transactions that we did in 2008 and 2009. It's going to feel like that market as far as number of sales. Again, I try to bring some good news. The good news is that I think the worst is behind us. Take a look at these charts, NAR numbers. The worst period that we all experienced, I think a lot of you guys in this room are going to agree, it was the first quarter of 2023. Started really slow because towards the end of last year, rates going up, consumer confidence was coming down, people were nervous, so we all had a really slow first quarter. And the second quarter was kind of getting there, but as you can see, we're not expecting any more drop. Now it's going to be market, it's going to be steady, and hopefully for 2024, we're going to see a growth in number of transactions. So again, I think we have the worst behind us. Here is another graph just to show you that the decline in number of transactions is now changing month to month. So we had, again, the biggest drop, look at it, in January of this year. We had the largest drop in number of transactions. And now, yes, the market is down. In July, the market was down, still 16%, but that's a much mild, I guess, a smaller drop compared to what happened here in the first quarter, 23%, 26%. New construction definitely is back to what it was pre-COVID. You guys are going to see a lot of new construction. I look at your closings. I know a lot of you are doing new construction. I think that this is going to help us with some getting some inventory in the market and bring some relief. But that doesn't mean that the market is going to change for a buyer's market. We're still short in inventory. Look at the existing home inventory. We're looking at less than 800,000 homes available in the market. And the green line that you see is the month of supply. And just compare this to those years before the last recession. We're not anywhere close to having enough inventory in the market. Another good news. I promised that some agents are going to leave the industry, right? It finally happened. It wasn't as significant as we were hoping. So in January when we talked, I was hoping to see about 400,000 people leaving the industry. Now the numbers are deceiving. I want to share this with you. If you go on NAR and pull the membership data, you're going to see a small difference. Yes, it's less than what it was in January, but you're going to see a small number of people that basically showing there's 1.5 million versus 1.52. Keep in mind, we're adding about 60,000 people to this membership list every month. So if your membership data is a negative for the first time, that means a lot of people are leaving our industry every month because we have new agents joining. We're adding to the membership. This is the first time in a long time, as you see, we have negative agent growth in NAR membership. Yay! So what I've been asking everyone is to educate yourself. Education is important in today's market. You know, we talk about the headlines. Why we're bringing the statistics? Because I truly believe you guys need to focus on your most important job, which is educating the consumer, educating your clients. Because we saw that there's still talks about recession. There's perceptions that are wrong about our business, and we need to address that. We need to talk to people. 4 million transactions is still a lot of transactions. I talk to some of our brokers, and they tell me, I don't know what agents are talking about. This is a great year for me. I'm doing really great. As a matter of fact, I was talking to one of our brokers yesterday. She called me after a listing appointment at 4:30, and she said, I just want to tell you I'm having a great year. I don't know why everybody's complaining. We just have to pick up the phone and make some calls and talk to people. I said, yep, you need to be in the next company update. Okay, so look at this. 1 out of 4 people, this is a survey that was done last month, 1 out of 4 Americans, they still believe that the home prices will go down, will depreciate. What does that mean? 25% of people out there, they're still pessimistic about real estate. That's our job. So we need to educate them. We want more transactions, focus on these stats. Okay, here's a stat from CoreLogic. They're one of the largest MLS providers, service providers. CoreLogic is showing that we don't have property value depreciation anywhere in the country. There are some places, look at the West, that we have less than 1%. So the market is pretty stable. But look at the southern region, the eastern region. Some states like South Carolina, we're seeing 6% in this market, 6% property valuation that is going up. So, yeah, overall, the country is seeing about 1 to 2% price appreciation, which is something that totally different than what the media is telling people. But again, look at the local markets. It's totally different. Top 10 states in price appreciation. This is for 2023. So this is in seven past month. And yeah, you're moving. Okay, somebody is moving back to New Jersey, I guess.
Well, it is nice. There are nice parts.
Absolutely. There's something nice about New Jersey. Okay. We've got the top 10 states, and I was happy to see South Carolina is on the top list, in the top 10 list. So yeah, definitely Try to educate people. Share these stats with them. They're coming from a reliable source. Let them know the market is not what you're seeing on the media headline. And for the people that are sitting on the fence, I think this slide will be very helpful. In the past 3 years, look at property appreciation in 3 years in some of the major markets. Nationwide it's 48%, but in some of the markets, I got Charlotte, they're 54%. 54%. And yeah, we had a change in the market. We talked about last year, in this year in January. It was kind of tough. The days on the market started going up, and look back, it's down again. It is the same thing. So we are over that hump. Definitely, we're done with that mild recession in the housing industry. We're done with that. Here's the forecast. You can see that at the beginning of the year, December 2022, these organizations, they came out. Majority of them, they thought that we're going to have a decline in property valuation. And look, they all adjusted their numbers for this year. Totally different market. Inventory down 50%. 50%. Yeah, it's not a buyer's market. And for those of you that you're concerned about foreclosures, take a look at these numbers. They're almost non-existent. We need so much inventory that any homes that have financial situation, before the banks have a chance to take it over. I mean, look and see, these numbers don't lie. They just keep coming down. They'll be absorbed in the market in no time. More stats about the housing market. I got this from Brian Buffini's forecast. 39% of all the homes in the country are free and clear. They don't have to worry about foreclosures. And look, another 29% of the population, they have more than 50% equity. Do you think these people are going to walk away from their homes? No. This one explains why we don't have the inventory. Now, there's so many different reasons, but think about how many people you know that you help them, you help those families to get into homes in the past 2 years, and they're enjoying amazing interest rates, right? Look at this. 23% of all Americans have a mortgage rate less than 3%. That's almost 1/4 of the market. That would be a very hard move to walk away from an interest rate 2.75, right? And then 38% of all Americans, they have an interest rate of less than 4%. So if you think about the market, more than 60% of the market is enjoying a very low interest rates. That's what's happening. Transactions are not happening. Inventory is not there because people are still enjoying this. But they're going to get over it. They're going to get over it. Absolutely. People have to move. If you need another room, you're going to have to buy another house. If your family is growing, if you're relocating, people do transactions in every market. We all know that. But I thought this is important just to show you, here's why we're seeing that the inventory is down, because people really, they're struggling about the idea of moving and giving up these low, very low interest rates. As soon as the market changes, going from 3.5 to 7% is not palatable, but it could be a different game when it's 5.5. Regional stats for the South region. Okay, guys, I'm really proud to look at this and talk about this. We are half of all the transactions in the country. So if we're going to do 4 million transactions in the United States, half of those are happening in the southern region. This is the strongest region in the country for housing market. And yes, we're down 16.5, but we're still doing better than everybody else in the country. Here's our local market. So this is, I like to call this slide like a self-check. If you feel like your business is down and you're not happy about your numbers, you can look at this and compare yourself and see how the rest of the market is doing. The Charlotte market, these are closed transactions. Overall, Canopy, 20% down. Asheville transactions are down 18%. Waynesville, 14%. Look at Wilmington, almost 38% down in number of closings. Inventory issue. There are no homes to sell in Wilmington. Popular area. Anderson, 9% down. Greenville, 10% down. Spartanburg, probably the strongest market so far, only 5% down. Myrtle Beach, 11.5. So now this is Myrtle Beach area. North Myrtle is actually about 15% down. Pawleys Island, 21%, and Georgetown, 24.6% down. So just look at these transactions before I know some of you are really hard on yourself and looking at this transaction and you're disappointed. Here is what's happening in the market. Here's a reality check. So if your numbers look better than this, then pat yourself, right? Commercial, talk about commercial quick. We have some commercial practitioners. Yeah, there's still a lot of conversations. I think the assets, anything that is over 2.5 million is going to be really hard in this market to sell. Days on the market are totally different now. There's not many people that are interested to buy these large commercial assets, but anything under 2.5 million is a different story. Office still hurting, but look, apartment building is doing good and industrial is booming. So yeah, when you think about commercial and you hear on the news that commercial real estate there's going to be bloodshed and commercial real estate is segmented. And that's what the people are talking about is only office. And that's because of working from home and remote work. Okay, so the last part of this presentation is about rates. I know we talked about this. I don't think the Federal Reserve is going to start cutting rates until next year. I could be wrong, but I don't see that happening in 2023. But keep in mind, interest rates, you guys have loan officers that you work with. You can just talk to them and educate yourself about the market. But the interest rates for mortgages for homes, they're not all just based on what the Fed is putting out there. So it depends on the bonds. It depends on supply and demand. There's so many other factors. And if you look at what's happening in the market, the number of applications are down significantly. The mortgage companies are going to have to make some adjustments. So this is the latest forecast as of August. So we got Fannie Mae, Mortgage Banking Association, NAR. If you look at the average of forecast, pretty much all these companies, all these organizations are expecting the mortgage rates to be around 5 3/4, under 6%. So there's hope. And that 1% decline in the mortgage rates is definitely going to motivate some of the buyers out there to get in a transaction. So yeah, look at this. The Fed is not going to probably start cutting rates until next year. But when they do, that will push the mortgage rates probably closer to 5%, 4 3/4. And that's when we would talk about that we see another wave coming probably by third quarter of 2024. Think about this. There are 3 million households making over $150,000 that are still renting. If this doesn't give you hope, I don't know what it does. I mean, think about this. 3 million people out there waiting for an opportunity to buy a house. And we have only 700,000 homes available in the market to sell. So yeah, the housing market is going to continue strong. These are great numbers. Last thing I want to just leave this with you. Think about this. Most agents know what is happening. Good agents understand what's happening, and great agents can explain what's happening. So make sure you spend some time to research your industry. Use some of these stats, but there are so many resources. NAR, educate yourself so you can educate your clients. This is a market that we need to talk to people about what's happening because a lot of consumers and buyers don't know what they can face in 12 months. It will be a lot more competition in the market. And while these rates are not really exciting, but I think this is a time for buyers to start looking at their properties because they have an opportunity to buy the house they like. And I said this before, I'm just going to continue talking about this because I can see this market changing in about 12 months into a complete market, probably something we experienced in 2021. Thank you.